Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about short-term capital gains tax rates, and I'm going to try to simplify this for you guys out there that are new to capital gains and show you how much tax you might owe and what the rate is on short-term capital gains. So any gains from the sale of stock is taxable and is divided between long-term and short-term. Gains from investments held for less than a year are considered short-term. The short-term capital gain rate is around 30 to 35% depending on your situation. The long-term capital gains tax is much lower at 15%, so if you fall in the short term, you're going to pay quite a bit more. As I go through this video, I just want to make you guys aware that at our site you can use our free online tax estimator, and if you do have a short-term capital sale, you can put in that information in the estimator and it's going to show you how it's going to affect your taxes. You must report all your short-term capital gain on your taxes each year. So this is required by the IRS to report any capital sales that you have, short-term or long-term. Wash rules do apply for short-term capital gains. What this is a wash sale occurs when an investor sells a stock and then repurchases that same stock within 30 days. So say you had a stock, you sold it, you had a loss. So you're thinking you can report that loss. Well, if you buy that stock back after you sold it within 30 days, you can't qualify for the loss. And this is something that the IRS looks closely at, is the wash sales, because they know the dates you bought and sold. So this is a critical area for you guys to understand, is you can't report that loss if you have a wash sale. You aren't going to get the full write-off on that. An example of a wash sale would be a taxpayer sells 1,000 shares of company XYZ on November 12th and then repurchases 1,000 shares on November 20th. A wash sale has now just occurred less than a year on the repurchase of that stock. The problem with the wash sale is that if it generates a capital loss, that loss can't be used as a tax deduction on your tax return. You must net the purchase price and the sales price to figure what your gain is going to be, and that's going to show you what your short-term gain ends up being. Short-term gains are considered ordinary income when reporting it for tax purposes. So in the box you put that in, it's going to be ordinary income. Now if you do the return online through electronic software, it's automatically going to fill in all of this information. It's going to tell you if it's short-term or long-term. So that's why I always recommend filing the taxes electronically if you can. The nominal tax rate will be whatever tax bracket you personally fall into for short-term, which is determined by your taxable income on your federal tax return. So if you're in a 40% tax bracket, any sale of short-term capital assets, you're going to be at 40%. I always recommend holding your stock over 1 year to qualify for that 15% bracket at the long-term rates. I want to show you the form that the sale of short-term assets gets reported on. This is going to be the form, if you're new to this, Schedule D. Schedule D gets attached to your regular 1040, and it's going to report that asset. And at the top here we have short-term, so it's going to be the description of that property. Could be a house, any kind of asset that has value. It's not just stocks. You have the date acquired when you purchased it, the date sold, sales price, and the cost here. And that's going to be your gain or loss. Now again, if you do the return online, it's automatically going to bring in this form and fill in all these areas for you. So it makes it a lot easier. And it prevents from you having any mistakes. And here's our website, HarborFinancialOnline.com. We do have a page devoted just to capital assets that you may want to check out right here. And it explains what I've already told you guys between short-term and long-term. And the capital losses, again, you can't take that capital loss if you have a wash sale, so be careful on that. And if you do it online, the form, it's gonna tell you about the wash sale and it won't let you take the write-off. Now, I want you guys to know that I do have videos on long-term capital asset sales, so you may want to check that out if you had the stock for over a year, because there are different rules and you have a different tax bracket. You're in a 15% tax bracket for a long-term capital asset sale, which is much better than the short-term. So I recommend checking that out. We have other videos on YouTube for all areas of tax, well over 100. And thank you for your time today, and we'll see you soon.